Hi, all, welcome back to our YouTube channel. This is Ajay from Market Mavericks. In today's episode, we'll be discussing how to identify false breakout or false breakdowns. This is one of the biggest confusions that traders always have is to like whether we should chase a breakout or we should let it go, we should wait for a price action. So let us discuss how we can identify possible breakout traps. Okay, so this is the goals chart we have right now on the screen, and I was fully invested in gold and actually had added a few quantities up, expecting mega breakout in gold because this is a resistance zone which is multiple times tested one, two, three. And if gold had consolidated and broken out like this, we could have gone for a really good target. But unfortunately, what happened ended up happening gave a vertical movement like this. Ideally, the first sign you have to look for a good breakout to happen is consolidation near a previous resistance zone. So the best possible scenario, the best favorable scenario for gold breakout would have been if market had consolidated two, three candles like this, and then if it had given a good breakout, we could have relied more on it because then there is an absorption of supply that is happening. But this particular candle had broken out on a few days back. The other sign to look out for is the volume. Okay, so if you look at the breakout volume, it's below average. Generally, for a breakout to be very strong, it will have really good volumes. It should be at least above average volume. So this is the first sign that you should be looking out for to identify a false breakout. And even if you look at this breakout, right, it if you look in the hourly chart, there is clear signs of rejection here, and even the hourly chart you will not see any volumes in the breakout candle. So you can see here. And what happened, market had come back, retested, but no signs of rejection. This is a clear negative price action. So I had exited most of my gold holdings somewhere around here. So and then what did market do? It had given a clear negative price action. If you look at the daily chart of gold, this is a bearish engulfing and it came with really good volumes. This week indicates trap buyers, people who would have chased this breakout despite the fact that the previous breakout candle did not have much volumes to show for. And then right now, gold chart is looking absolutely bearish. This is a lower low formation. The first support is somewhere around here, but we are not discussing about gold here. Two signs to identify good breakout. One, ideally, market should consolidate for a few days near the previous all-time high and then give a solid breakout. One, second, even if it's breaking out much earlier, it should be supported with good volumes and not below average volumes like this. So, hope you learned something new today. Thank you. If you like the content that we share, please do like the video. Give us your opinion by putting it out in the comments and please subscribe to our channel. Thank you.